You can get a copy of my free ebook, Technical Analysis Basics, with one click. There is a link in the description box down below. So maybe you're new to technical analysis or you've been using it a while. There's a series of articles in this book that'll get you using some more technical analysis tools pretty much right away. It's written for beginners to intermediate, super easy to use.
Hi everybody, this is Lara from Pure Elliott Wave with an analysis of FTSE UK 100 using FXCM data. I believe this is spot data for this market. I'm doing this in response to a member's request. He asked me to provide analysis of British pound US dollar pair, which was my last published analysis, and FTSE because, well, they go together, don't they? I've started with as much data as I can get, and off to the left of the chart I have to make some assumptions because this data from FXCM, let me squish this up for you. This data only goes back to April 1986. Now I know that data for the UK index will go back a lot further than this, but that's all I've got to work with from FXCM, so I am unable to do a grand supercycle analysis, and I am making an assumption that this may be the end of a first wave at supercycle degree and this may be the end of a second wave. This could also be the end of a third and fourth wave. That's also possible, and so that would be an alternate idea at grand supercycle degree. This may not be a third wave, this could be a fifth wave, but the structure is incomplete. No matter what that assumption is, from this low to this high, this is an incomplete five-wave structure. It will not fit as a five, but it will fit as a series of two overlapping first and second waves. And so I'm going to label up to this high in July 2007, cycle 1, and this big low down here to January 2009, cycle wave 2, where 2 ends, 3 begins. And within 3, primary waves 1 and 2 may be complete. This is the end of the COVID crash, January 2020. Well, actually they crashed just before COVID, didn't they? That was earlier. The US markets bottomed out later. Also interesting to note that this wave count is quite different from my wave count for the S&P 500 and wave count for NASDAQ. These are very different markets. They have very different wave counts, although they all do have a strong bullish bias. This wave count expects a third wave at primary degree within a third wave at cycle degree, maybe in its early stages. Now this could be within a supercycle degree third wave or a supercycle degree fifth wave, depending what the data off to the left of the chart looks like, and I can't analyse that because I don't have it. So it could be either third or fifth, but either way, primary and cycle degree waves 3. A target for primary 3, reasonably, 12,027, where it would reach 1.618, the length of primary wave 1. Within primary wave 3, intermediate 1 looks incomplete. Intermediate 2 may not move beyond the start of intermediate 1 below 4837. I have drawn an acceleration channel around primary waves 1 and 2 from the start of primary 1 to the end of primary 2 and placed a parallel copy on the end of primary 1. This upper trend line has multiple tests. This has reasonably strong technical significance. The lower edge of the channel may offer support if intermediate wave 2 is very deep. It may not be that deep though. Finally, primary wave 1 fits as a leading contracting diagonal. Let's have a look at this structure on the weekly chart, the low down here of cycle wave 2, actually monthly chart. This is the quarterly chart. We're now going to the monthly chart. This low here for January 2009 on the monthly chart is this low down here. Primary wave 1 fits as a leading contracting diagonal. It labelled intermediate 1, 2, 3, 4, 5. It meets all of the Elliott Wave rules for a leading contracting diagonal. 3 is shorter than 1, 4 is shorter than 2 and it overlaps into one price territory as it must for a diagonal. 5 is not truncated. It may not be truncated for a diagonal. It moves beyond the end of 3 and it's shorter than 3. Regarding subdivisions within this leading diagonal, because this is a very common question or common complaint, sometimes phrased as a complaint, my subwaves are labelled all as zigzags. I am using the Elliott Wave rules as laid out in Frost and Preachter's classic Elliott Wave Principle, which you can find on their website for Elliott Wave International, and you can find it on Amazon. It's the gold standard for learning Elliott Wave. Those are the only rules I use, and my rules and the rules as I've written them in my book, Pure Elliott Wave, are written slightly differently, but I haven't changed the rules. I've just worded some of them slightly differently. And so within those rules, it states that within a leading diagonal, subwaves 2 and 4 must subdivide as zigzags. Subwaves 1, 3 and 5 most commonly subdivide as zigzags, but they may also appear to be impulses. That rule, well, that's how it's written in Frost and Prechter as a guideline, which in my book I've written as a rule, so that's a slight change, but I haven't changed the meaning of it at all. Subwaves 1, 3 and 5 most commonly subdivide as zigzags within a leading diagonal. It's written differently in some other places, but I am going to use always the gold standard, Frost and Prechter's Elliott Wave principle. That's where I get Elliott Wave rules from. Following a leading diagonal in a first wave position, the second wave correction after usually is very deep. This is a 0.69 correction of primary 1, so a bit deeper than the 0.618 Fibonacci ratio. So this part of the wave count follows a common behaviour. If 2 is over there, then 3 has begun. The target on this chart is the same as on the quarterly chart, and primary wave 3 must move beyond the end of 1. It must move far enough above 1 to then allow 4 to unfold and remain above wave 1 price territory. So there's a long way up to go. This market, probably very similar to the US indices, probably has a strong bullish bias and a strong tendency for its third waves to be very extended. Within primary wave 3, I am seeing intermediate 1 as incomplete. When it's over, intermediate 2 should then unfold, should last a few weeks, maybe about the 0.618 Fibonacci ratio of intermediate 1 would be a reasonable area for support and may not move beyond the start of 1 below 4837. Draw a trend channel around intermediate 1 from 1 to 3, place a copy on 2. When you draw it that way, it absolutely perfectly shows where 4 found support. That offers reasonable confidence to this part of the wave count that sees this an incomplete impulse. Let's zoom in on this and look at this impulse unfolding for intermediate 1 from its low down here on the monthly chart. This is the same price point on the weekly chart. I have labelled it minor 1, 2, 3, 4, 5. I haven't put all the labels for minor waves 1 and 2 in. I've focused on minor wave 3 to see will it subdivide as an impulse, and yes it will. And here's the middle of the third wave. There's disproportion between micro 4 and micro 2. That's okay. The indices don't always have great proportion. It does meet all Elliott Wave rules, and it does fit so far as an impulse. Minor 1, minor 2, minor 3 is extended. Minor wave 4 subdividing as a zigzag, labelled minute A, B as a triangle, and C moves beyond the end of A. There's no truncation here. No part of B moves beyond the start of A, so minor 4 subdivides as a zigzag. I think minor 2 probably most likely would best fit as a double zigzag, but I haven't spent the time on that. But it looks like there's some reasonable alternation between those two. If minor 4 is over here, then minor 5 should have begun, and because this fits so beautifully within the Elliott channel, we can have a little confidence that minor 4 may be over there. If the target is wrong, it might be a bit optimistic, but the most common relationship for a fifth wave to exhibit is that of equality in length with the first wave, giving us a target at 8385. Within intermediate 1, if minor 4 is not over here, and if it continues further, it may not move into wave 1 price territory below 6516. If this trend channel is breached by downward movement, I would then label intermediate wave 1 over, and then I would expect intermediate 2 may be underway. I would define a breach as a full daily candlestick, a red downward moving session below and not touching this trend line. That's my definition of a breach. Let's take a look at some classic analysis. So I'll look at the monthly chart and the weekly chart. This is the important low in March 2020. Up off this low, importantly, there is no bullish reversal pattern on the monthly chart, and this month for April 2020 lacked support from volume. Price is now moving up within a huge, big consolidation with resistance around about 777 and final support possibly down about here, about 5,600. A huge consolidation that price entered back in 2012, 2013. The longer price spends within one of these huge rectangles, the longer and stronger the resulting movement is going to be. So we need to see a break either above or below a close, and possibly we could use maybe a 3-week a day rule, a 3-week away rule. So have 3 weekly candlesticks fully above and outside of the rectangle in order to have confidence in that breakout, to filter out any false breakouts. When we have that, we could have some confidence that price is broken out. When that happens, I'd expect quite a long, strong movement in either direction. At the moment, it looks like the breakout may be upward because price is moving up off the low from January 2020, and volume is supporting upward movement. This last month here of upward movement in October 2022 was particularly strong with a good push from volume. So I would read the volume profile here as bullish. No signal from on-balance volume, but it is making highs prior to price, and so that would support a bullish outlook for the FTSE. ADX is declining. There is no clear trend at the monthly chart level, but the negative DX line remains above the positive. ADX is now at fairly low levels. It could be setting up to indicate a new trend. This is a lagging indicator. It's based on a 14-period average. So here, the average is just over a year. So if there has been a trend change back here, it's going to take over a year for ADX to catch up. It has been over a year, but these downward months in between slow down the change of signal, if that makes sense. RSI is in neutral territory. It didn't reach oversold on the monthly chart at that last important low, and there was no bullish divergence. Money flow also neutral, also no bullish divergence, didn't reach oversold, and ATR showing some increase as price moves higher, so there's support from volume and range. That's bullish. That supports the Elliott Wave count. On the weekly chart, here's a bullish candlestick reversal pattern for the week beginning 22nd of March 2020, so up off that important low there is a bullish candlestick reversal pattern, and it does have push from volume, so that's really good to see. This supports the Elliott Wave analysis. There is a smaller consolidation here with support about 6863 and resistance about 7665. We need to see a breakout of this consolidation to have confidence in the next direction for price. Overall, as price is moving slowly higher, there is push from volume at the weekly chart level as well for this portion, and that corresponds with the Elliott Wave third wave within the impulse. And this last little piece of upward movement is showing declining volume. That corresponds with the fifth wave on the Elliott Wave count. So volume supports the Elliott Wave count. You would expect to see declining volume within a fifth wave. Doesn't mean it has to be over, but it supports the Elliott Wave analysis. On-balance volume gives no recent signal. ADX is declining at both time frames, no clear trend. RSI neutral, reached fairly deeply oversold at that last important low in 2020, didn't exhibit bullish divergence. ATR was increasing throughout where I have the Elliott Wave third wave within the recent impulse of intermediate 1. Here's the third wave, ATR increases, so volume increases, range increases. That supports the Elliott Wave analysis. Now volume is declining and range is declining throughout the fourth wave, and now as the fifth wave possibly begins, a bit of decline in range. That supports the Elliott Wave analysis. That's all from me with FTSE analysis for you. I hope everyone had a really awesome New Year's. I've had not really a break, but I haven't worked as much over the week of Christmas and New Year's, but back into it now, hopefully, with quite a lot more free analysis coming up for you on this channel in the next couple of weeks. Thank you for your support.